Welcome back, and joining us on the show now is Dr. Claudiu Covrig. He's founder and lead analyst at Covrig Analytics. Claudiu, hi, good to have you. I know you're attending a sugar conference in Bangkok right now, and yes, sugar is a topic of discussion also because we're looking at prices in the global markets trading at a 4-year lows right now with the kind of sell-off that we've seen in the New York session yesterday. There is good crop with major producers right now, but is that impact now baked into the prices?
Yes, thank you for inviting me. It's always a pleasure to be here with you. The thing is, in the sugar market, we have some bearish fundamentals on spot. Brazil is producing a lot, and there is not too much demand. So the demand is kind of lagging. Either people are expecting lower prices, or maybe they already have some stocks, and then these stocks are not getting consumed. Now, the problem is the actual conflict that we have in the Middle East, and then this is very supportive for crude oil. That's why we've seen some spike in price on Monday, because we have a lot of participants in the sugar market, our producers, consumers, refineries, but also the funds. And then the funds were about 95K lots short, and they still have a lot of room to go to 200K lots short. So that's why now they have to see with their risk management departments if they are allowed to go so short in such a turmoil. We've seen the reaction in the crude oil prices. So whenever you have this kind of conflict, generally you have to cover these shorts. But many people in the market, they think that sugar still has to trade its own fundamentals. And then what are these fundamentals saying? Are saying that, yes, we had a floor, which was led by the Chinese import arbitrage, and Chinese import arbitrage was open at around 16.5 cents without considering any cash premium in the domestic market. But then now the next floor is the ethanol parity in Brazil. And then the ethanol parity in Brazil is much lower. It's about at 15 cents for some meals, for other meals is higher. And what means this for sugar? It means that if we go so low, this means that the producers in Brazil will reconsider their position on producing sugar or doing more ethanol. So unless we see a reaction from Brazil, because Brazil has now 65 to 70% of the world's trade on raw sugar, right? So they are big exporters. So they need to do something to see now a support. So, and this support now, unfortunately for them, is at 15 cents because Petrobras also lowered gasoline prices. They precipitated a bit, I would say, of lowering gasoline prices was right before the conflict ignited in the Middle East.
Oh, well, absolutely. Claudiu, also, I'm looking at various numbers right now, and while USDA does seem to feel that we're looking at a big surplus this time around, the international sugar organizations and numbers are quite different. How do you read both of these very, very contradicting numbers?
Well, many institutions, they have different numbers, right? We are analyzing, and we are going on our forecasts. We see a surplus of sugar next season, but this season is quite imbalanced. Why? This season we had plenty of, let's say, disappointments, especially in India. We had lower production there. We had low production in Pakistan. We had low production in many countries. Now, the thing is that, the funds would look on ahead. So what we will have in the next season, right? And then the next season for us is in a surplus of about 4.2 million tons. This is because we have the ongoing crop in Brazil, which looks good. Then we will have a recovery in the Indian production. We will have a recovery in the Thai production. But the thing is how consumption is reacting, because everybody discusses on production, but consumption was lagging. Consumption was kind of stressed. You see, in India, for example, if you compare the numbers from last year with the numbers to this year, we've lost 1 million tons of sugar consumption. Okay, it was not really a loss because practically the alternative exports have been replaced. pipeline, domestic pipeline has been reduced, so the drop is not so much. But okay, in the stats, you have to work with what you have, and then this consumption that was lagging is also pressuring the market now. So we see a surplus now. A 4.2 million tons surplus estimated for next season is not a very big surplus, right? We had seasons with surpluses of about 10 million tons or 11 million tons. But
Sure.
the small problem here is that, okay, where is this surplus going to be? And India is a country with surplus next season. What they're going to do with these stocks? Yeah, they easily can carry stocks of 8 million tons, 10 million tons from one year to another. So this sugar, even if it appears in the stats, it is locked in. You cannot export 2026 sugar from India.
Sure.
It's a ban on export. Another thing is that Indian sugar to export is expensive. It's expensive. It's about 20 cents for raw sugar and above 21 cents for white sugar, right? So then the market has to come up to the Indian parity level if indeed needs this sugar. But we are very far away from this period.
Kind of numbers.
Next year, probably in Q1. For the moment, we have this pressure.
All right, Manisha, thanks very much for taking us through that conversation with regards to sugar prices. For